Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, August 27th, with your grain market morning commentary. Currently, grains are trading mixed. We have wheat and corn lower, beans higher. Corn 6 to 8 lower, beans 7 to 9 higher, and wheat's trading about 2 to 4 lower. Now, I haven't talked about the outside markets much lately, but with the possibility of a missile strike against Syria, it's important that we at least touch on the fact that crude is nearly $3 higher today, and the equities are lower. S&P is about 16 or 17 points, and the Dow a little more than 100 points. So the grain markets are trying to trade their own fundamentals right now, the supply, the demand, the weather. But these outside markets at some point could have an effect on the grain market. So if we see the equities keep, moving lower, if something happens in the Middle East, grains could start to get weaker off of that. Yesterday, we had the weekly update on the crop conditions. We saw some deterioration as we figured, another 2 to 4 points off in the soybeans. We went from 62% good to excellent just a week ago down to 58%. And we should figure that we're going to continue to see this trend as we're going through a major heat wave in the heart of the Corn Belt right now. So August has been very warm. It's been very dry. And this is a critical stage for the soybeans. Soybeans are what we're going to talk about today because this is the big mover. We've rallied almost $2.50 in the past 2 weeks. Remember, just 2 weeks ago, I was saying, hey, if we get up to that 200-day moving average, which was at $12.70, maybe $13, is kind of overreaching. Well, we popped over $14. So right now, NOV contract right around that $14 level. I think the market, yes, is technically way overbought, but we're factoring in the prospect of a smaller crop. So we've had real good demand. That hasn't gone away. At some point, prices may need to move higher just to ration demand. But at this point, we are at $14. It is make or break time for the soybeans. Some timely rains, an inch here, an inch there over the next couple weeks, and we can make some good soybeans. The plant is smaller, the pod count is down, and right now the pods aren't filling, so that's why the price is moving up. We need to factor in right now, err on the side of caution that we're going to have a smaller crop, and we need to ration what we do have. We're going to look at another year, 2013-14 crop supply is being tight. So that's where we're at right now. If we do get these rains in the next couple weeks, we could see the prices come down, possibly test that 1270 level again. It may be support this time. In the corn, we saw good to excellent, 59%. A week ago, it was 61%. I think this corn rally, we're starting to factor in a little less yield there too, but for the most part, I think the corn crop has been decided. It's a little late in the game to really damage that crop. We'll see how weather moves ahead as far as, when it's time to harvest, and if we're able to get it out in time, the possibility of an early frost still exists. But as far as this hot and dry right now, I don't think it's having the impact on the corn as it is on the soybeans. More of a sympathy rally there. And wheat will continue to follow corn. That's all I have time for now. Please feel free, give me a call, 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.